Dave, thank you very much, and thank you for inviting me to speak here this afternoon. Of course, you rightly mentioned that I'm the Shadow Financial Secretary to the Treasury, but of course I also, within the Conservative Party, look after Wearside and work very closely with Lee Martin, candidate in Sunderland Central, and Conservatives here in the city to make sure the Conservative voice is heard in Sunderland, but also the voice of Sunderland is heard in Westminster as well. And so what I want to talk about today is how I think the economic policies of a future Conservative government can benefit the North East. And it's been helpful over the last few years in doing both my work in the Treasury team to look beyond perhaps the city and the square mile, which is my main responsibility, but also to look to some of the challenges that a region like the North East faces. And of course, the challenges I'm familiar with. I was born and brought up in County Durham. My parents moved to Peterlee when they got married. That's where I was born. I went to school in Durham. So I'm very familiar with the North East and some of the challenges it's faced. And of course, it was here where I cut my teeth. In my first general election was fought in South Shields in 1997. I came second in that election campaign, but it helped spur me on to continue to be involved in politics and to share some of the experience of my own background in the North East, in the political world of Westminster. And I'm pleased as part of the Conservative Economic team to be able to contribute to the formation of economic policy, to think very carefully about how it will affect and benefit the North East. What I want to set out today is our plans for a new economic model and make the case that the transition from the old model that we've seen over the last decade presents a unique opportunity for the North East to grow and develop in the future. But before I set out that model, I want to talk about some of the causes of the current economic crisis. Because I think unless we talk about those causes, understand them, and understand the lessons that we learn, it's difficult to build a new economic model for the future. We need to look at what sort of economy we had before, what kind of growth we had, and why that growth ended in a financial crisis and in an unprecedented recession. And once we've done this, I think the way is then clearer. With a tentative return to growth in the fourth quarter of last year, with tax receipts falling, businesses going bust, and government borrowing rising at an unprecedented rate, it's tempting to work out how we can return to business as usual. But the reality is the growth we experienced in and up to this financial and economic crisis was built on debt. Debt fueled public spending. Rising house prices powered by access to cheap money drove consumer spending. And we became too dependent as an economy as a whole on the financial services sector. It also meant that growth widened the gap between the greater South East and the rest of the country. We see this here in the North East: structurally higher unemployment, a declining industrial base. We've seen 58,000 manufacturing jobs lost in the North East, and increased dependence on public spending. What we need is sustainable economic growth, not growth fueled by a bubble, and growth that will flow throughout the whole economy and the whole country. So let's look at what the unsustainable growth is based on, so we can draw the right lessons from the future. One of the factors that fueled economic growth in the last decade has been an unprecedented rise in public spending. But that rise was both unprecedented but also unsustainable. And because of that, we now have the largest budget deficit in any major economy, forecast to be 12.4% of GDP in 2009-10. And frankly, just as consumers are ill placed to combat the downturn, so too is the taxpayer. We clearly need to put public finances back on a sustainable footing. But that debt didn't just fuel government spending. Consumer debt, too, was one of the great drivers of the growth in the previous decade. But it's left us with a huge legacy. Consumer debt in the UK is equivalent to that of France and Germany combined. We're the only country with more credit cards than people, and that surely can't be the right solution for our nation. We've also become too dependent on our flagship industry, financial services. That fueled growth in London and the South East, but few of its benefits spilled over into other regions. Now, the financial service sector has grown rapidly since the Big Bang deregulation in the 1980s. And in the last decade, if anything, the pace had picked up. And the balance sheet of the financial services sector grew significantly in recent years at a faster pace than that of the household and business sector, demonstrating the innovation of the sector, its importance to employment, economic growth and tax revenue, but also, because it outstripped the growth of the underlying economy, its long-term unsustainability. And clearly, as we've experienced over the course of the last 2 years, once the supply of cheap money dried up, our economy ground to a halt. So we need to rebalance our economy, put it on a sustainable footing by having a more diversified economy, a stronger and more diversified private sector, and savings and investment rather than a buy now, pay later culture. Sustainable levels of private borrowing, sustainable levels of public spending, an economy that is strong and sustainable through its diversity. That's the way ahead for the UK. So how are we going to do this, and what will it mean for the North East? We've recently published a document setting out the 8 benchmarks by which people in this country were to judge the economic track record of a future Conservative government. It sets out a model of sustainable growth that presents a new opportunity, a new economic model for the UK. The first benchmark is to restore macroeconomic stability by getting control of public spending and safeguarding Britain's credit rating. As George Osborne made clear in his Mace lecture last night, unless we have a clear, credible plan to cut the budget deficits, interest rates will rise, increasing costs for business and driving up mortgage payments. Without that credible plan, we will put economic recovery at risk. We'll reform the regulation and structure of the banking system to ensure lower levels of leverage, less dependence on unstable wholesale funding, but a greater availability of sustainable investment funds for small and medium-sized businesses. And we'll also improve Britain's international rankings for tax competitiveness and business regulation. These are important benchmarks that I think will help deliver sustainable growth across the whole of the UK. But there's one particular benchmark that I want to focus on today. We set ourselves a benchmark of ensuring that the whole country shares in the rising prosperity that our economic reforms will create, particularly outside of London and the South East, including, of course, particularly here, the North East.